Ladies and gentlemen, welcome to Woodburn Accountants and Advisors China webinar series on managing your accounting and tax in China. You have joined us for day 2, part 2 of this webinar series, where we will be investigating the operational aspects of the Chinese VAT tax and Fapiao system. The whole goal of this week's webinar series is to provide everybody with an idea around implementing control systems within the organization, within giving an understanding about tax planning and how to do tax planning, to give you an understanding about just generally operationally how the Fapiao system works, and particularly to get this whole connotation that accrual accounting doesn't exist in China away. We're also going to talk on Friday about a very big topic, which most people are aiming to look at, which is developing profit repatriation strategies to bring capital outside of China. So there are not too many of you that have logged in thus far, so I am going to miss this slide because everybody that is online today, I know. But for those that of you that are on YouTube and are watching this recording, I usually start off my presentations just trying to get an understanding of the audience, i.e. who's a newbie, who's a startup, and who's an experienced China hand. But we'll skip that today because I do know everybody that's online. Most people answered this yesterday, so I do have also an understanding about who is a finance manager and who's a non-finance individual. And I'm going to gear VAT, this presentation, even for those who are finance people, in a very simple format. Because it is quite a complicated topic in many instances. So regardless of whether you are finance or non-finance, I will try to simplify this as much as possible. How the webinar works, so I try to teach you and educate you. Today I'm going to be educating you on VAT in China. Use this time wisely. It's your time spent. It's a complimentary webinar. I will be staying online until all questions have been answered in the Q&A. So, ask away. As I say, there is never a dumb question in China. All questions are relevant and are important. So please don't hesitate to just insert that into the questions section of the control panel. On the technical side, if you guys run into any issues, unfortunately I can't help you, but just know that the recording of today's session will go up on our YouTube channel and a link will be provided to you so you have easy access to it. If I get into any technical issues, I will get bumped off the system. It usually takes me about 30 seconds to 1 minute to bump back on, as long as there are no issues with the Wi-Fi connection and bandwidth. So just so you know, I will be coming on, I will be finishing today's presentation. Completely understand if time prevents you from staying on, but just know I'll do my best to come back on and finish. So who am I? Again, this is primarily for those of you that are going to be watching it on YouTube, because I know everybody that's online today. But my name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. I have over 17 years of corporate services and compliance experience in the Chinese market. I'm predominantly based out of Shanghai. My focus for those last 17 years, I know that this slide has to be updated. My focus for the last 17 years has been on helping foreign investors with their inbound investment into the Chinese market. And very simply, I'm also a creator of the China Roadmap methodology, which if you guys are interested in joining, I have my last webinar of 2020 is going to be on the 8th of December. I will be on your China Roadmap, which is basically a road map or a step-by-step plan, giving you insight on what superpowers you need to obtain in order to make sure that your company is protected, your investment is protected. And it is sort of a workshop, so a handout will be provided, and we go through basically a checklist and an action plan of what you might be missing out in regards to your entity or what you need to catch up on. If you're interested in subscribing to that, because there are more and more people that are joining on right now, you can go to our website at woodburnglobal.com/events. I'm sending you the link now, where you can then register for this event. We are covering a lot today. this is a very, very big agenda. So I want to get cracking on this. And bear with me. So for those of you that are finance people, I may be talking to you like you're clueless, but as we have a very mixed audience of non-finance and finance people, I do want to make this as easy as possible to understand. All right. So one thing I want everyone to understand in terms of VAT, which is value added tax, it is a sales tax that is applicable on all services and all trade transactions. Okay. And it is actually the major source of tax revenue for the Chinese government. Okay, so there are very rigid rules and systems that you need to abide by in order to make sure that you remain in VAT compliance. When you establish your company, you have a choice to either become a general VAT taxpayer or to remain as a small scale taxpayer. So what is important to understand is what is the difference between these two things. Basically, the general VAT taxpayer status means that the company can reclaim or offset VAT on purchases, on sales of goods and modern services. Whereas a small scale taxpayer cannot offset that input VAT, i.e. any VAT on purchases, okay? Now, if you are a general VAT taxpayer, you are required to pay VAT monthly, which means that you are required to produce your financial management reports on a monthly basis in order to make sure your calculation for VAT on every month is correct. If you're a small scale taxpayer, your VAT is payable on a quarterly basis. That does not mean that your financial management reports should be produced on a quarterly basis. It is still recommended that you produce them on a monthly basis so that you can react to your business quickly, okay? Now, once you apply for the general VAT taxpayer status, you have that status. There is no turning back to become then a small scale taxpayer. So if you go directly from the incorporation stage and you decide, I want to have this GVAT status, you have that status basically for the life of your entity. If you decide to remain as a small scale taxpayer because actually you don't have that many purchases, because actually you're just purely a cost center, you're not planning on having revenue, you're not planning on doing any sales, you're just purely a cost center, or you are even just a service sector company whereby you have very limited purchases, then it is also recommended to remain as a small scale taxpayer, okay? I would recommend for those of you that have quite heavy trade transactions where you are purchasing and selling at the same time, then it is really in your advantage to become a general VAT taxpayer. Now, the issue is when you are a small scale taxpayer, to become upgraded to a general VAT taxpayer status, there's usually a threshold status that you need to achieve, which is you have to earn a revenue of at least 800,000 RMB, and it will be then a decision by your tax officer whether you get upgraded or not, or whether you can have a negotiation with them to remain as a small scale taxpayer, okay? So keep that in mind. So this is really the 101 about VAT in China, okay? There are two statuses, small scale, general VAT. You need to make a decision as soon as your incorporation is done to decide what status you want to have. You really should be talking to a tax advisor on that to see what is best for you in your first year of operation and what is most advantageous to you, okay? Because like I said yesterday, our goal is not to evade taxes. Our goal is to optimize our tax situation, all right? And you should be talking to someone about how to best structure that once your company is actually incorporated. This is just slide one, by the way. So we go on. So what is VAT? So for those of you that are non-finance people, very simply, VAT is, the calculation is very simple. It's output VAT, so the sale. When you make a sale, there's going to be VAT on it, minus the input, VAT, which is the VAT that was on the purchase from your supplier, okay? So in China, you have a variety of invoices, which are called fapiaos. Fapiao is the literal translation to invoice, okay? And you have several types of VAT invoices. You've got VAT special invoices and VAT general invoices, okay? VAT special invoices, which are made out by the sellers of either goods or services. So let's say Woodburn is invoicing a client. So I'm the seller of a service. Then I would have to, in some instances, issue a VAT special invoice, which can be deducted by the other party within 180 days. Okay, so you don't have to deduct it in that month. You can have 180 days to deduct it, but it is something that I would recommend you to have a nice picture of your company's status on a month-to-month basis to do it at that month where it's been issued, or in the following month where it's been issued. These are the VAT rates. So there's been tremendous development basically in the course of my career in China. So from 2003 to today in regards to VAT. So one thing I want you all to be aware of, because if you do your own Google search right now, you will probably see VAT and business tax. Business tax no longer exists today. Business tax used to be the tax that was associated with service industries. That no longer applies anywhere. So when you are doing your own searches to have an understanding about VAT, please make sure you're looking at current information so you don't get confused, okay? So nowadays, there is, on the sale of services and goods, there is one tax, it's value-added tax. But there are different rates depending on the industry, the sector, the goods that you're selling, the services you're selling. And if you look at the column, which is since 2019, this is the most relevant to you in regards to the rates. So if you are just in a normal, okay, I don't want to pick out names or anything, but there's one company on today's, who's attending today, who is in the garment sector. So garments, textiles, fashion, this is all the first line item, sale of goods, where your VAT would be at a 13% rate, okay? In my case, being a accounting firm, consulting firm, business management firm, whatever you want to call our company in terms of the definitions of the business scope in China, I'm under business supporting services, which is item number 3. My VAT rate is at 6%. Now, all of these rates are if you have the general VAT taxpayer status. I don't. I have decided to remain as a small scale taxpayer, and I've been able to negotiate that with my tax officer to be able to remain as a small scale taxpayer because I do not have a lot of purchases to deduct, okay? So currently, under COVID times, my VAT rate is at 1%, whereas in normal times, not with COVID, it would be at 3%. So I'm saving quite a bit on the VAT. Now, don't get me wrong, I am passing on that VAT amount to my clients when they're paying my invoices, but it is much lower than it normally would. So in 2020 with COVID, it's at 1%. I call it 1.5% if you add the surtaxes. Otherwise, it would be 3 to 3.5% in normal times. And then if I would get upgraded to the general VAT taxpayer status, it would be 6% or 6.8% if you are adding the surtaxes on them. You have other sectors as well. If you are in logistics, it's also at 6%. But again, you need to have that general VAT taxpayer status. So I'm using myself as an example where I have actually made the decision to remain as a small scale taxpayer, okay? And that's been just a very strategic decision. So in terms of small scale taxpayers, right? Again, the normal rate is at 3%. This slide is showing you the rates if you have that general status. As a small scale taxpayer, regardless of what you are selling, goods or services, your rate is at 3%. It is unified at one rate, which is 3%, okay? And when you are a small scale taxpayer, you actually make out only VAT general invoices, okay? Now, the disadvantage of VAT general invoices is that the other party cannot make any deduction with that invoice unless you apply for a special VAT invoice at the tax bureau upon request from your customer. All of my customers have requested that. So I do have the ability now to be able to issue these special VAT invoices at my office versus having to go to the tax bureau each time. This is a new ruling that has been initiated, but previously I did have to go to the tax bureau, not me. My staff had to go to the tax bureau every single time that we had to issue a VAT special invoice. That is the only inconvenience around being a small scale taxpayer. But like I said, there are new regulations in the bigger cities where you have the ability to now purchase special VAT invoices to have in your office to be able to issue to your customers. And you just have to go through that approval again with the tax bureau. I'm hoping that you all understand that I have a lot of communication with my tax officer in order to get certain rights, approvals. And again, that will be, like it was my conclusion yesterday, it will be my conclusion again for today. So I want you all to remember that. Now, as a small scale taxpayer, I cannot deduct any of the input tax. So on purchases, right? So any VAT that has been applied to me on purchases that I've made. So for example, really the only cost that I have is stationery that I purchased from a third party, and obviously they have VAT on when I'm buying their goods. There's VAT on. I can't deduct that VAT as a small scale taxpayer. Okay. Again, my purchases are not enormous, so it doesn't impact me in terms of my status or my tax liability. So you have to make sure you make that evaluation. In addition to that, probably one of the bigger advantages is that if I have less than 100,000 renminbi of sales, of revenue in a month, or 300,000 in a quarter period, because as a small scale taxpayer, VAT is payable on a quarterly basis. So if you hit a revenue of 300,000, meaning you've issued FAPIAOs, whether general or special, of less than 300,000 in a quarter, and again, remember the calendar year is the fiscal year, so in those quarter periods, then I'm exempt from paying VAT at all. Okay, so keep this in mind. That's another big advantage if you are starting off very small, to remain then as a small scale taxpayer. So let's move on. So FAPIAOs and their liabilities. So like I mentioned earlier, there are two types of FAPIAOs. There's the general VAT FAPIAO, which is issued by small scale taxpayers, but you cannot use that FAPIAO as a deduction tool if you are general VAT taxpayer status, which is why if you are doing any form of transaction and you have the general VAT taxpayer status and the other party is a small scale, you just have to request that you want a special VAT FAPIAO in order to make deductions. Okay, it's just a very simple request and very normal to do. But what I want to highlight here is that FAPIAOs, which I'll show you a picture of later, FAPIAOs are the evidentiary proof that a transaction has occurred. They are the evidentiary proof, the legal proof that a transaction has occurred in China. So I do make the joke that they are considered like gold because a lot of your accounting and your tax is going to be based on the FAPIAOs that you collect. And there is a lot of confusion out there that your accounting should be based on FAPIAOs, which then might seem like it's cash accounting versus accrual accounting. Okay, so, and I will go into details on that later on in today's presentation to highlight that. But what I want to tell you is that the FAPIAOs are critical for your business in order to be able to basically declare any expense, any revenue, any cost, etc. All right. Now, So generally, if you're general VAT taxpayer, you don't want general VAT FAPIAOs. You want only to receive special VAT FAPIAOs, and you will then be issuing special VAT FAPIAOs. The FAPIAO, the special VAT FAPIAO, has a lot of information on it, okay? And you cannot make a mistake, a single mistake with any of that information. There are both parties' information in there. The minute that an error occurs, you will have to cancel that FAPIAO and reissue it. And the cancellation process, pardon my language, is a pain in the butt. All right. You want to be precise in regards to the information that you put on there. In terms of the FAPIAO liability, if a company fails to produce a FAPIAO when requested by a customer, it is considered as an illegal act because the transaction cannot be recorded, which means the transaction was an illegal transaction. Okay, so from my perspective, FAPIAOs are considered like gold. They are the base of your business. They are the base of your accounting principles and obviously tax principles. Okay, so we don't want to mess around with VAT invoices or VAT FAPIAOs. Now, on the special VAT FAPIAO, you need to provide the seller and the buyer's name and business address in Chinese, the seller and buyer's tax reference in Chinese, which is the TIN number, TIN, which is now also on the business license. You need to provide a description of goods and services. You have to provide the bank account information of the seller and buyer. You have to provide the sales price in renminbi and the VAT calculation. Because I want everyone to remember, FAPIAOs are related to domestic transactions, okay? If I issue an invoice to an overseas company, I'm just issuing an Excel formatted invoice. I'm not issuing a FAPIAO to an overseas company. They can't do anything with that FAPIAO. If you're transacting with overseas entities, there is no FAPIAO. It is purely for domestic business. And I think there was this question that was raised earlier. I think, Rizal, you had that in your registration form. So FAPIAOs are only issued for domestic business. You create then a Word invoice or Excel sheet for if you're transacting with overseas companies. But the actual VAT is going to be applicable on all transactions, whether you are transacting with an overseas party or a domestic party. I think that was specifically your question, Rizal. So if you have an entity in China and you're transacting overseas or you're transacting domestically, there will be VAT implications that you have to be aware of. All right. So this is what a special VAT FAPIAO looks like. Okay, you've got the buyer's information at the top, the seller's information below. You've got your invoice seal, which is what is going to be issued when you set up your company. You have basically all of your information in there. Okay, all of the details that are listed. So this is what a special VAT FAPIAO looks like. Okay, now how do you purchase these beautiful pieces of paper? You buy them at the tax bureau. Okay, now when you set up your company, you are considered a startup, which is why I call you guys startups, because in the eyes of the tax bureau, you are a startup, which basically means that once you get your general VAT taxpayer status, even if you get your small scale taxpayer status in Shanghai now, you can buy the special VAT FAPIAOs. But this is a booklet. It is a booklet of 25 to 50 of these sheets, okay? The value, the maximum value that you can put on one of these sheets is 10,000 renminbi. So if I have a client that I'm invoicing for 25,000 renminbi, I'm issuing 3 of these sheets. One sheet will read 9,999. Another sheet will also read 9,999, and the remaining amount will go in the third sheet. Okay, so I'm issuing 3 of these sheets, which means with one client, I will have, if I only purchase a booklet of 50 sheets, I will then have 46 sheets left, or 47 sheets left. Okay, so please be aware of that. that you are limited by the amount of sheets you can purchase, and that each sheet has a value to it, where if your transaction is higher than that, you have to issue more sheets. Okay? Now you can obviously, if you run out of all the sheets in your booklet, you go to the tax bureau and you apply to get another booklet. Okay? If the tax officer says you're only going to start off with 25 sheets, he will want to see your transactional history and consistency of your transactions before allowing to increase the quantity of sheets being issued. Okay. Now the next level of value on a sheet is 100,000. So you go from 10,000 to 100,000. To be able to purchase that booklet of sheets where each sheet is worth 100,000, you need to have a consecutive period of 3 months where the sales amount, the revenue, is 300,000 renminbi per month. So it would be 900,000 for the quarter period. Okay. In some cases, the tax officer might say you need to have 500,000. That's again a dialogue you need to have with your tax officer in relation to how you are able to get to the next level where the value of each sheet is worth more. Okay. Otherwise, you just have to do tax bureau runs and go and purchase your tax booklets. Now, the beauty of COVID was the fact that we could order the booklets with our tax officers and they would courier to us. This was unheard of in the past because there is extreme value to these fapiaos. And probably you haven't imagined this yet, but there is a black market for fapiaos. So obviously the fear of the tax officers or tax bureaus is that the courier companies will steal those fapiao booklets and then sell them on the black market, okay, which nobody should be doing. But now with COVID, there hasn't been a choice, but now that China's opened up, we are getting back to that system where we have to purchase these booklets at the tax bureaus. Now, if you have a special transaction, let's say you have a special transaction where the value of that transaction is, I don't know, 750,000 renminbi, okay? This is not a problem because you won't probably have enough sheets as a startup, but you can easily go to your tax bureau, explain that you have a contract, show them the contract and say, you've got to issue fapiaos that are worth the amount of 750,000. How do I do that? Okay. The tax bureau, upon seeing that contract, will then say, all right, I will issue you those fapiaos with each fapiao amounting to 100,000 from the tax bureau directly. So he will do it on your behalf, okay? Which means he will then provide you with 8 sheets, each sheet worth 100,000, okay? So don't worry, because if you get into these special transactions where the value is so much higher than your regular transactions, you just have that open dialogue with your tax officer, explain the situation, provide the contract, and then he'll be able to get you solved. Okay, I hope this is getting into people's minds that having this open dialogue with your tax officers is really, really, really critical. So for those of you that are trading, okay, and for those of you that are providing services, I wanted to give you some guideline on how it actually works in relation to the actual transactions. So let's say you are importing into China, and just remember the formula, okay? VAT payable equals, and the VAT payable is monthly if you're a general VAT taxpayer, quarterly if you're a small scale taxpayer. It's the output minus the input if you're a general VAT taxpayer. For small scale, it's just the output. All right, so if you are importing products into China, okay, then the overseas supplier sells products to you, the Chinese customer. And upon the importation, customs duty must be paid together with the input VAT, okay, which is calculated on the CIF value of the product, okay? And the VAT will depend on the product, will be at least 13%, but depending on what you are importing, it could go down to 9%, okay? Plus then the customs duty. Okay, the Chinese customer, so you, the Chinese entity, has to settle that payment before the goods will be released to you. And then when you are reselling those products, so a very typical trade transaction, wholesale trade transaction, if you are reselling those products to end customers, the Chinese importer, i.e. you, will pay VAT on a monthly basis based on the VAT on the resale, okay? So if you're selling on consignment basis, you're looking at that month's consignment amount, the VAT applicable minus the input VAT of that same quantity of goods, not on the total quantity of goods that was imported. So it's on the consignment. For domestic transactions, it's a very straightforward principle, okay? The VAT is paid by customers along the supply chain, okay? And the VAT payable is basically the output minus the input. It's really, really straightforward. In terms of export, okay, so if you have an entity in China and you are exporting goods, then it's the last owner of those goods that can apply for a VAT rebate, okay? And the VAT rebate rate depends on the HS code of the product that is being exported, all right? So I haven't put any rates here because it really does depend on the HS code of the product. So the VAT rebate, so if you are the last exporter, so you are actually the seller to the overseas customer, you will be able to apply for that VAT rebate, okay? And there is a certain period of time where you have to initiate that application. I think you only have 90 days to initiate it, all right? If you are in the service sector, it's very similar to trade, kind of, except you're not buying the service and then selling that service. You're not an intermediary. You're actually just selling the service. So basically, the service company generates revenue through service fees. There is VAT applicable on those service fees. If you are a general VAT taxpayer, it's 6%. Small scale taxpayer, 3%. Under COVID, it's 1%. And then you have the surtax that comes on top of that. Okay, so usually I would say it's 6.8%, 3.5%, or 1.5% if you want the whole VAT to be paid off by your customer. The VAT payable is anything you've purchased. So whether it's stationery, I don't know, you've used an outside provider for marketing, and if they issue an invoice with VAT, you can deduct that only if you're a general VAT taxpayer. Okay, now here comes the dilemma for most companies in relation to cash accounting or accrual accounting. So you have invoicing options. Who knew that? Okay, so the invoicing options are, you have two. The first is you sign a contract with a Chinese customer and you immediately issue the VAT invoice. Okay, the minute that a VAT invoice is issued, it is booked in your system, in the accounting system. Okay, then you wait for payment of that invoice. So depending on your payment terms, it could be either immediately, 30 days, 60 days, 90 days, 180 days, whatever it would be with your Chinese customer, okay? For me, the downside of doing this method as a startup means that you have an imbalance of your cash flow because your customers might not be reliable on paying you, which means out of your own pocket, you're gonna be paying the VAT from that transaction without even getting the payment. So you might then say, all right, in the startup phase, I'm actually going to have a totally different internal policy. I'm going to first issue a pro forma invoice, or a pro forma invoice to the customer. I'm going to wait for payment. Once I get payment, I will issue the VAT invoice. The upside to this is that it frees up your cash flow. From an accounting perspective, it looks like you're doing cash accounting, but you don't have to do it like that. So this is the mistake that many Chinese accountants do. They do their accounting based on when that fapiao was issued, not based on when, for example, pro forma invoices have been issued, which would then be the accrual accounting method, okay? You will have different companies in China having completely different policies. You might have suppliers say to you, I give you the VAT invoice up front and you pay me later, okay? Other suppliers might say, no, I give you the VAT invoice only when I get payment from you, okay? In all of those scenarios, right, the accountants should not be doing what I actually call VAT FAPIAO accounting. They should be doing it based on accrual accounting, which is if you've issued a pro forma invoice, you should accrue it in that month, because you might get payment 2 months later, but you want to allocate those funds in that month, because then you have a proper understanding of your business month to month, okay? If you get a supplier who says, you know, I only issued the invoice to you later, but you want to have that booked in that month because you're going to make the payment, or, you know, if that project is due for that month, you do the accrual for the cost, okay? So there are Chinese accountants that have been taught to stick to this, what I like honestly call it, I don't even call it cash accounting, I call it FAPIAO accounting, where they base everything on the FAPIAO. And this is where mistakes happen and where there's so much confusion on how you should be operating your accounts with the FAPIAOs. Okay. I couldn't find a picture which said FAPIAO accounting, so I chose this one which said cash versus accrual. But I'm hoping that I get the picture out there and I've said it with enough transparency for you to understand what I mean. You want to create an accounting system in your company that gives you a good picture of the current status. Whether you've received FAPIAOs or not, you need to be able to book your revenue, your costs, and your expenses accordingly, whether you have to do it by accrual or upon receipt of the FAPIAO, okay? There is no PRC regulation saying you're doing FAPIAO accounting. Nothing like that. Of course, accrual accounting exists. Of course, you can do it based on accrual accounting, okay? But I just want you to be aware that there are accountants that don't have that education or knowledge level, all right? So that should be very important when you are trying to interview accountants or even interview service providers, okay? Because there are a lot of local accounting service providers that do the FAPIAO accounting method, okay? All right, VAT exemptions. VAT, yeah, all of this stuff with VAT exemptions is always very complicated. So I put in a chapter here about cross-border services, okay? With a team of people that are in China, then you're paying VAT in China. If the service is being delivered outside of China, but you are issuing the invoice from China, then you can apply for VAT zero rate or VAT exemption. Okay, that's the easiest way for me to be able to explain the cross-border services. And I mean, there are even exceptions to what I've just said, but that's the general gist of cross-border services. Service actually being delivered in China, you are going to pay VAT. If the Chinese company is issuing an invoice and the service is actually going to be delivered outside of China, you can apply for VAT exemption or the VAT zero rate. In places like Shanghai, you have the ability to not apply for this. You do actually your tax declaration with the exemption or the zero rate, depending on the sector that you're in and the type of service that's being delivered. And then you do your declaration, and then your tax officer will come back to you asking for additional supporting documentation to prove that the services were actually delivered outside. okay? So don't cheat around the system. Make sure that you know what you're doing in terms of the zero rate and the tax exemption. And if you have confusion, talk to your tax officer. The clarity will come from him in terms of what you can and cannot do. Just don't go with no supporting documentation. If you have a contract on hand, it makes it so much easier to be able to explain what you want to do and that the service is being delivered abroad, that then he has no way of saying anything except that, yes, you can apply for either the exemption or the zero rate. Okay. VAT FAPYAO compliance and management. So VAT FAPYAOs are, again, considered like gold by the tax bureaus, to the point where if you have your own operating office in China, you will be required to purchase a safe where the FAPYAOs will be kept inside. And if you get a visit from the tax officer and you don't have that safe, you will be penalized and a penalty will be put on you, okay? So make sure that you're following those rules in terms of having a safe and making sure that your VAT FAPYAOs are protected. Why do I say this? Because I did a liquidation process, I mean, this was probably 12, 14 years ago, of a company in Shanghai, manufacturing company in Shanghai, where just the company went downhill, management wasn't paying attention. But when we went through the closure process, the tax bureau requested us to give back the remaining FAPYAOs that had not been used. The company had lost them. For each FAPYAO lost, there is a penalty of a minimum of 10,000 renminbi, because that's the value of the sheet. If you have lost FAPYAOs that are the value of the 100,000, the penalty is the 100,000 renminbi if you've lost those sheets. So it is extremely critical that you do not lose these booklets, okay? Because you will have to purchase a VAT software system that is utilized to calculate your VAT payable either on a monthly or quarterly basis. You record the, let me go back to that sheet so I can show you properly what I mean. If you look on the top left-hand corner, there is a barcode, barcode, like the square thing that you scan, and then underneath that is a number, 4990997436885. That is the code of the sheet, and it goes up in numbers when you buy the booklet. Okay, so you got to be very, very sure that you don't lose those sheets and that they follow up in the number when you're recording them in the FAPYAO system. Okay, so on one side, VAT compliance and management has become easier in the fact that now there's a cancellation of the special VAT invoice verification process, meaning that me as a small scale taxpayer, I can buy special VAT invoice booklets myself and issue them for my own office. There's also a tax classification coding for goods and services, so that when you're in the software system of the VAT and you're putting in the description area the goods and services, there is now a code system to unify everything. And you also have now e-invoices. So if you go to a restaurant now, the restaurant most likely will issue an e-invoice versus a paper invoice, a paper FAPYAO, like they used to, okay? So e-invoices are becoming more and more popular. The downside to them for me is that if I want the company to reimburse me, I have to print it out, and there's a time frame where the e-invoice is valid and where you can view it. So you have to be very, very quick to be able to print it out, because you have to give it as a reimbursement, right, to your company. You can't give your phone with a photo. You actually have to give a printout of it in order for your company to be able to give you the reimbursement. So that's the disadvantage from my side. But on the other side, obviously, there are also stricter supervision policies. And one of them is that the taxpayer identification, which is the TIN number, taxpayer identification number, which is actually the number that is also on your business license, must be included on all general invoices and special VAT invoices. And if it is not on there, the FAPIAO is considered invalid. And there is a more frequent trend where tax officers, if they feel like there's something in their gut telling them something's not right, or there's a warning, or there's a red flag, they will do a tax audit on you. Okay, and this has become a more recent trend. And everybody's affected by this tax audit, because it's not just they're auditing your company, they're also going to be auditing the FAPIAOs issued by your suppliers. I mean, it becomes a whole hoopla, okay? Which is why tomorrow I'll be talking about tax audits in China and how to avoid them. And we're going to be talking about 4 main scenarios around that. So if you want to sign up for tomorrow's session on tax audits, please do. You can go to our website for that, and I'll give you the details on that. There is also, and this leads on to Thursday's session, common expense fraud schemes, right? Where you have fake FAPIAOs, or you've purchased FAPIAOs on the black market, you've canceled, so many ways, okay, of doing these types of fraud schemes that I'm going to be highlighting on Thursday's session. Again, leading to the concept of FAPIAOs, because that's where the biggest fraud occurs, all right? So that's on Thursday's session if you want to join that. But to conclude today's session, what I just want to highlight is talk to your tax officer. If you want to understand everything about repatriation strategies, or you want to understand small scale versus general VAT, or you want to understand purchasing the booklets, or if they will do a favor for you in terms of buying more sheets, or whatever it might be, have that open dialogue. In addition, make sure you have an internal policy as to who keeps those FAPIAO booklets and where are they kept and who's tracking them and who is purchasing them, okay? And obviously, I mean, I've highlighted here point 4, be precise, but let's also face it, we're all human. Mistakes happen, okay? A spelling mistake, or you've got a number off. I mean, this just happens, okay? You want to be as precise as possible. So what we do, and what we've instilled in many of our clients, is that before we actually give the original FAPIAO to a customer, send a scanned copy of it, in order for customers to be able to check that all the data is correct within it. It's a partnership. Everybody in the supply chain is going to be affected if there are mistakes in the information and the data, okay? So use your parties to just verify, right? Have somebody else have another set of eyes on it. Alternatively, what I also recommend everybody to do is when your company is established, create a table. So what I do is I create a Word document for our clients where, first of all, they've got all their bank information, the capital account, the renminbi basic account, and the information is in Chinese and in English. And because the English is for the overseas transfers or transactions. And then there's a table highlighting everything that has to go on the FAPIAO. So all this information, I'll just go backwards again. All the information of, so if I'm selling a service, my information in terms of name, business address, tax reference, description of goods and services, bank account information, that's all in this table in both English and Chinese. So that if anybody requires it to issue an invoice to me, or I want someone to verify something when I'm sending out an invoice, it's all within this table and you have it on hand. And you know, that's part of operational guidelines, right? It's making sure that you're all set up in regards to that. But although I am highlighting be precise, I'm also highlighting the fact that humans are human and errors do happen. Although it is a pain in the ass, FAPIAOs can be canceled and reissued. It just, you know, it takes time to do it, and it might affect how the accounting status looks, depending on which month the FAPIAO was issued and in which month you can get it canceled, okay? But it can get canceled. So again, we try to be precise, human errors happen, so there's always a way to solve those issues. So to conclude today's session, how can we help you? Well, we help basically on implementation and growth services. So everything from budget creation, validation, all forms of tax advisory, implementation of ERP systems, the full or partial outsourcing of accounts, tax, bank, invoicing, payroll, and then we also do health checks and internal accounting and tax compliance reviews. So if you guys are interested in having a quick meeting or you need some clarification and you don't want to do it during today's Q&A, but you want to have a direct chat, you can set up a meeting with me directly in my diary. And I'd be happy to jump on a call with you for 10-15 minutes to discuss it. So I've sent that through the chat box link. You can also add me on WeChat, which is always an easier way to communicate, or email me. And you can also connect with me on LinkedIn, although I'm a bit slack on LinkedIn at the moment in terms of reading my messages. But you can reach me in a variety of different ways, and don't hesitate to do that. So let's look at some of the questions that came in. So Sarah was asking, or Rizal was asking, what is the VAT of 6.72%? Okay, so Rizal, this is where it becomes very interesting. The 7.2, so the 6%, I'm assuming they're a general VAT taxpayer, and I'm assuming it's because of business support services. The issue is the 7.2. I rounded off to 6.8 to make sure that my taxes are fully covered when I'm issuing an invoice. You can do 6.72. I've also seen companies do 6.5. That is the surtaxes where you can't have a definitive amount associated with it. I do 6.8, which is the highest, because I know that everything will be covered, and sometimes I have a tiny bit left over to my advantage. But you will have ranges from 6.5 to 6.8 where people will choose the most random numbers in between. So I hope that answers your question, Rizal. Sarah was asking a question. Can you tell if most of the foreign businesses in China are general or small scale? Well, generally, if they use the rates of 6% for services or 13% for goods, then you know they're general VAT. If they're using 3%, then you know they're small scale. So it depends on the invoices that they're issuing. You cannot tell it from reading their business license. So Sarah, if that's what you meant, then no, you can't tell it from that regard. You can only tell it if you're transacting with them and they're issuing you an invoice. You can see the tax amount, and then you have an idea of what they're doing. So Rizal, Sarah, I hope I answered your questions on that. Those were the only two questions that popped in. If anybody else has other questions, please do let me know. I'll be staying on anyhow. Like I said, if you want to set up a 15-minute session with me, don't hesitate. Happy to have a chat. And then also just to highlight, we have a China Roadmap community on WeChat, which I'm fostering. And if you want to join that community on WeChat, you can just connect to me with my WeChat ID, which I've added here in the chat box. And I can add you in. And last but not least, we have 3 more sessions, exciting session. Tomorrow we'll be talking about how to avoid a tax audit. On Thursday, some tips on implementing internal control systems, and on Friday about profit repatriation. So please do join for those sessions as well. You can do that at woodburnglobal.com/event. I want to thank everyone for joining me. And like I said, if you do have more questions, I will be staying on for another 5 minutes. If not, set up a call with me and I'd be happy to speak with you directly. I want to thank you all for joining. Have a great afternoon or evening. Take care and goodbye.